Hello everybody, a very good morning to you all and welcome back to howtotrade.com and welcome back to another live stream here across the trading room and across our X, LinkedIn, Facebook and YouTube accounts. I hope everyone has had a good week so far and is doing well. As we approach the end of this week, it's been, for me personally, it's been a difficult week to trade, just because not really found much clear direction. We've been spoiled over the last couple of weeks with clear directional moves, especially in the US dollar, really, and that's fueled quite a lot of volatility in everything, to be honest with you. But there's a little bit to talk about, but more than anything, what we was going to do for today was a little bit of a masterclass in using fair value gaps in trading. And I thought about using this stream because yesterday there was a little bit of a fair value gap created off the back of Nvidia's earnings, which we'll talk about as well. And I just wanted to show you some of the ways in which we can trade fair value gaps. And if anyone has any questions on fair value gaps at all, then feel free to ask on the YouTube channel or in the room, and or on any of the social medias, and I'll be more than happy to help you out. Hello to you all who are lurking around. Good to see you. Hello to you, Anna. Good to see you on the YouTube channel. Thank you very much for the message, and I hope you're doing well. It's good to see you. Just to let everyone know, I stream pretty much at the same time every single day unless there's something different, and you can see the streaming schedule in our trading room. So make sure, if you want to know the exact times and when we're actually streaming, if you head over to our trading room, which is just at howtotrade.com, and then enter our trading academy, you'll see our streaming schedule for the week. Me and Shane will start to fill that up for next week as well. Tomorrow we'll do that, so it's always full. So yeah, that's when you know when I'm streaming, but it's always roughly at the same time, about 10 o'clock in the morning, unless there's a big news event, which I'm going to start to jump into. Hello to you all as well in the trading room. It's good to see you. Treehawk, hello to you. Thank you very much for the message. FaZe, hello to you as well. Good morning. Good morning to you, Lita. Hello to you, Bobby. And Curtin. Curtin loves FVGs, which is fantastic. So he's going to get right stuck into this stream, which is fun. You probably already know how to trade them, Curtin, to be honest with you. But there we go. Hello to you, Olive 2017, the current leader in our trading competition. Hello to you. Hope you're doing well, and thank you very much for the message. Who else have we got? Hello to you, Jerry 92. Good morning, sir. I trust you are good this morning, and I am good. Thank you very much. Hope you're doing well as well. FaZe has just said that the euro dollar, which we've been speaking about over the past couple of days, has just broken the demand zone, and you are right, and we will talk a little bit about that, and hopefully we can find some FVGs maybe to trade off the back of that. Would be good. Dan, hello to you. Good morning, and thank you very much for the message. Hope you're doing well. I'm very well, and I hope you are as well. Hello to you, Wizard Alvin. Good to see you. Lots of people getting involved. Aman on the YouTube channel, hello to you. Hope you're doing well. Let me know what it is you're trading today, everyone, and if there's any questions that you may have or anything that you want me to run through in today's stream. I do always have my streams as a little bit of an open book, because I know people will obviously want to know what I've got to say on the topic, but there might be some questions that people have that are just trading related or anything like that, and feel free to do that as well. And Ensomi32, hello to you. Good morning. Someone who's new here, and a very warm welcome to you. Thank you very much for tuning in. If you do have any questions on what it is that we do here, and if you're struggling to find your way around the trading room or around the website, then feel free to let me know. Good morning to you, Dantes Media. Hello to you. I hope you're doing well. Thank you for the message. Getting loads of messages this morning. It's good stuff. Thank you very much to everyone who sent them in. Right. So, what should we talk about first? Let's talk about something that maybe people missed, but if you missed my stream yesterday, you may not know about this. But if you did watch my stream yesterday, you would know about this. Simple as that. I said that yesterday, the main event of what we had wasn't necessarily in our economic calendars as such, but it was a stock, a company reporting its earnings. S&P 500 led stocks lower ahead of Nvidia's earnings, which disappointed, which I'm quite surprised in. So basically, Nvidia released their earnings report. And if I can actually get, it'd be helpful if I could actually, because I'll show you it, because it's just Doesn't make any sense. And this is sometimes when perfection has been priced in. There we go, I found it here. So Nvidia's second quarter results released after the bell on Wednesday showed adjusted earnings per share tallied $0.68 per share on a revenue of $30 billion. Analysts were expecting earnings per share of $64 and $28.8 billion in revenue. This time last year, they reported 27 cents per share and $13.5 billion. So they over doubled their revenue, and obviously over doubled their earnings per share. Yet, what happened? Go to Nvidia. We saw this huge sort of spike lower off the back of the release. And that was quite concerning for me. There's two things that I think about that. One is that we're in a period where only perfection will do, or when perfection's already been priced in, everything after that's a disappointment. How can those earnings be a disappointment? I have no idea. They beat estimates and they over doubled the same this time last year, and decent forward guidance as well about AI chip demand and all that sort of thing. And that's where probably some people were a little bit frustrated. It is recovering initially, but it did drop 8% off the back of the release, and that obviously put pressure on the Nasdaq. Hello to you, Aman. I don't speak Hindi, unfortunately. I do apologise. I'm pretty one-dimensional. I do only speak English, so I do apologise if I'm speaking too quickly. Then let me know, and I'll slow it down. I acknowledge that maybe some people may not be able to understand. Universal, hello to you. Hope you're doing well. What about gold? Well, we'll touch on gold when we've done the little bit of a lesson on the fair value gaps. We'll go straight on to two requests that we've got, which are gold and euro dollar. So make sure you stick around for that, because I will touch on those markets as well. And I can't provide you a funded account. No, we don't do prop challenges here. We're not a prop firm. We're an educational company. We provide market analysis and educational courses. And if you do wish to trade with one of our brokers, or our broker, which is Switch Markets, then you can do so. I can't provide a funded account, unfortunately. I wish I could. Dante says he's good. That's good to hear. Thank you. Dan says the markets have gone. Have the markets gone mad? What's gone mad? Oh, as in, are you saying that because of what I thought you meant there was a move that happened. I was like, what? Oh no, yeah, they have gone mad. The stock market is well, it's a difficult trade at the moment, to be fair. Look at that recovery though from the back of the that was basically the drop down in Nvidia's earnings, and the recovery's been mad. I actually think that maybe what will happen, Dan, is people will come on to that, like that they will cotton on to the fact that, you know, that wasn't an 8% drop worthy report, and as you can see, it's already recovering quite aggressively. When you see V-shaped recoveries like that, I think there could be some more strength to come. I've been waiting for the time where the Nasdaq starts to tick a little bit higher, and you can actually see. And I will speak about this in just a second, but look at that. The problem is it was at 11 o'clock at night, and I'd switched off from the markets from then, but it's good educational tool anyway. Okay, right. So let's just talk a little bit about fair value gaps and what it is I want to speak about today, because I don't actually believe there is too much that's going on today that we need to worry about. GDP, I suppose. Yeah, okay. Actually, maybe there is. Is that tomorrow? Let me refresh this calendar. I was going to say, because I thought we were saying that core PCE was tomorrow. No, okay. So There may be some volatility coming later on, to be fair. Maybe I was slightly wrong about that, because we have got the gross domestic product, which is basically the economic growth figures out in the US later. So there could be some volatility coming into today's session. It is Thursday as well, which is typically quite a good day to trade. So be aware for that one. The forecast is for it to be 2.8 versus a 2.8 previous. So any beat will likely boost the dollar. Any drag lower on GDP is likely to sink the dollar even more, and probably boost the likes of gold, universal for you. That would be something that you should look out for if you're looking at gold today. But anyway, let's just have a quick talk about FVGs and what it is. So in our trading academy, you will notice that we have got a course on smart money concepts. If you go to course number 6, and you'll see me there, and you will go down to module 3, and you can see I've got here 2 lots: candle imbalances and how to understand and trade fair value gaps. Now they're both people call them the same thing. People say that FVGs are the same as candlestick imbalances, but I would say that if I just get rid of some of these windows, I think I've opened so many that we're starting to lose a little bit of connection. That's better. Now, candlestick imbalance for me, let's just use a bull market as an example. The way that I differentiate it is candlestick imbalance is basically from wick to wick when there's been an impulsive move either to the upside or the downside, and there's no gap in the market like a fair value gap is, but there's an imbalance of buyers and sellers. So in this case, there's more buyers than sellers quite clearly, and it creates an imbalance. Okay, keep that in mind. For me, an FVG is created when the market you actually see a physical gap. So really it's just the way that I've learned to do it. A lot of people will call this an FVG as well, and they're all FVGs. It is still an imbalance of buyers and sellers, but the fair value gap for me is a more extreme version of the imbalance. Okay, but they both can be used in similar situations. I just think in terms of actually trading from them, fair value gaps are the best. Imbalances are the best for using them as profit targets, because they still act as like a magnet for prices, but they're much better in terms of using profit targets rather than turning points. But you can use them for turning points as well, and I will show you an example. Excuse me. Yes, Dan. Yeah, German CPI out at 1 o'clock as well, which means euro dollar is going to potentially see a little bit of volatility, and we will touch on euro dollars. I know FaZe is really looking forward to that. Hi, Dantas Media. I'm not quite sure what you mean by there. Is it important to buy the product and your account reads 0? You might have to elaborate on that. I'm not quite sure what you mean. And so yes, I can touch on that. No problem. Yeah, I'll have a look at that for you. No worries at all. I'll have a look at that for you in just a second. A couple of requests to go through. Before I go through those requests, that was, I was going to do like a lot of detail into that. But if you look at the actual chart, you can spot, imbalances, all over. Look at that. I've literally just gone on it, and already I can see imbalance there, imbalance there. And these are like, if you're going to look for selling profits, imbalance in there. Look at that. That was filled perfectly. And I always say that imbalanced FVGs are a magnet for prices. So just a little tip for you. If you're struggling to find areas of take profit when you're in a trade, try and target some imbalance. If you look up here, I've literally done exactly that. There's really clear imbalance between 20,200 and 20,000 in the NASDAQ at the moment. And I'm looking for if I'm going to get into a buying opportunity, as you can see by that green line, I've got sort of the 50% of that imbalance as my profit target. If I ever get into a trade and manage to get into a buying opportunity, which I am trying to do, that's going to be my target. And that's how I like to use it. Fair value gaps, they're interesting, because what you get with these is you get some opportunities to actually, place some trades. So if you look what happened overnight, this was basically when Nvidia released their earnings report, okay? The market closed up there and opened down there. If you go down onto a 1 minute time frame, it's probably even clearer exactly what happened. Okay? And we can use these fair value gaps as support and resistance areas to look to actually physically buy and sell. So you can use it as almost like a strategy. The best way to do it is you wait for the gap to be created, and these often are created over the weekend as well when you go from Friday's close into Monday. That happens. Obviously, we're on Thursday at the moment, so I can't really go through that, but this is a good example. And what you tend to do is you wait for the gap, the gap to form, and you wait for the market to open again. And then what you do is you mark, the 50% area of that gap, which, as you can see, if I zoom in, sits right here. That fair value gap got filled literally perfectly at 50%. And what people do is they sell at the 50% with a stop loss just above the gap. And you can see that this would have gone on to get you a nice quick 2 to 1, 2.5 to 1, depends on what you want to target. And you should have, if you were in this trade, protected your stop loss there and maybe got stopped out entry, but at least taken some profit along the way. I always say to myself, if I get to 1 to 1, I take half off. And if I get to 2 to 1, I move my stop loss to entry and maybe even take a little bit more off. So I would have had a decent, run at this. What other people do as well is, if you want to, is you wait until you get the reaction from the 50% and then you get in. And you get sort of a better risk reward. So if you're looking for, you would have struggled. If you wait for the reaction, I know it's orange on orange, I do apologise. I probably would have tried to sell maybe at the 50% of this imbalance that was caused in that reaction. But you can see I would never have been filled and I would have missed out on the trade. That's sometimes the nature of when you try and be a little bit greedy with your risk and reward. You sometimes don't get filled. So that's really the way that you'd do it. And there's a way to do it as well if the opposite happens. Say you're wrong, because it won't always happen. And what you've got to remember is when you get in that trade and you sell, in this example, it's very likely that the market's going to come and fill the rest of that gap at some point. And that's fine. Because if we delete that, I didn't want to delete that one. If we delete that and bring that over, 2 seconds. Sorry, just had to reply to a message there. Right. What we can do, which I think is really cool, is that we can actually play the opposite side once that fair value gap is broken, because we know it's acted as resistance before. So what's happened here is that fair value gap pretty much got filled, right? And then what happened is the market had an explosive move to the upside. And there's 2 ways that you can do this. The first way, and I don't really like this way if I'm being honest, but there is a way you can do it. And I know this is a good example. It may not be the case. Is that you basically set a buy stop when the fair value gap is broken above. And if you'd done that, you would have cottoned onto a really fantastic opportunity. This is all hypothetical. I know people will say, yeah, but what's the likelihood you're actually going to do that? Depending on where your stop loss is, depends on your risk reward. But your stop loss probably would have been below this low, right? That probably makes sense, below the most recent low. That's not the way I tend to do it, but if you did do it that way, there's nothing wrong with that. So basically, we're talking about resistance turn it into support. The other way is that you wait for that fair value gap to be broken in the opposite direction, and then you wait for a decent area to look to try and get involved, basically. Now, difficult in this example, because I probably would have maybe used this 50% here. See that imbalance? I probably would have used that and not get filled, and that's the nature of trading. But there are ways in which you can get involved along the way. Look, you can see basically what I've done is I've turned on a smart money concepts indicator, which lets me know some order blocks along the way. Okay, say for example you didn't manage to get in here, and then the market explodes higher again. Or there's a potential entry there. Look at that, 50%. Oh, potential entry there as well. And basically what I try and do is enter off either the 50% of the imbalance or the order block. So as you can see in this example, if I zoom right in here, there wasn't really any order block. That's not really an order block for me. But the 50% of the imbalance works. And again, what happens? Market goes higher. What happens here? Because these little bits here, this indicator shows you imbalance. 50% of the imbalance, boom, goes higher again. And that's like the perfect entry. That was absolutely textbook. And you can just follow it up. Now, I'm talking about, I've missed 4 opportunities here. I still can get in here. And you're just following that trend. Order block respected higher. Broken higher. Another order block respected higher up here. In fact, we're now at a stage where we can maybe try and get in down at 19,342, about 40 pips away. But you can see how, that just ride that trend all the way up. And I know this is a textbook example. It may not work like that in the future. But that's the sort of thing that you need to look for. Either those imbalances or fair value gaps, those sorts of things. And you can see how we just used, basically, all we've used in this concept is an initial fair value gap off the back of the Nvidia earnings. We've got a potential 2-to-1 selling opportunity. We then got a break above, and this is all scalping, so I'd lower, risk has got to be low here for me. We then get resistance previously, which now turns support, and we ride the wave higher, and that's what we do. Okay, I've probably got a few questions, I imagine. I'm not too bad. Hello to you, Endlonlos SMX. How are you, my coach? Yeah, I'm doing well. I hope you are doing well as well, and thank you very much for the message. Right, let's go through a couple of the requests that we've had. The first one was just talking about trading sessions, and really what we're talking about. And who is it who asked the question? MSomi32. How to identify different time zones, London Asia session and New York session. There might be an indicator for that. There actually is. Let me turn everything off. Wow, that's pretty cool. Not really sure how that's working. I'm just experimenting here. But essentially what we're looking for is we've got the different time zones in which we trade. So you've got basically the Sydney session overnight, which is if you're from the UK, these are the times, 9 p.m. till 6 a.m. You've got the Tokyo session, 11 p.m. till 8 a.m. The London session, 8 a.m. till 5 p.m. And the New York session, 1 p.m. till 10 p.m. And essentially the way in which people do, and I don't focus too much on it, but what people say is that you trade the markets that are in that time zone, MSomi. So, for example, right now it is 10:30 a.m. and we are in the London session, and that means that the likes of the pound and the FTSE and the euro, those sorts of sessions, those sorts of currencies, they're the ones that you'll find you'll get the most movement out of. You're not going to trade the Australian dollar now at 10:30 a.m. in the UK. And that's essentially what you've got to do. So New York session, you're talking about US pairs, right? And it's just about being mindful of when to trade. So you're going to trade the Aussie dollar, New Zealand dollar in the Sydney session. Tokyo session, you're going to trade, the Japanese yen. And maybe like the Hang Seng indices, Asian indices. In the London session, you're going to look to trade the FTSE 100, the pound, the euro. And in the New York session, you're going to look to trade gold, US indices, dollar, that sort of thing. And that's really what you got to split it out to. So always ask yourself when you come into to analyze the markets, what is it that you're looking to, what is it you're analyzing, and does it make sense in the current time zone that you're in? And that's why I don't really trade the Aussie dollar and the New Zealand dollar, because I'm never awake for it. I rarely trade Japan. I do trade a little bit of the Japanese yen, to be fair. It's a bit harsh, but these are the markets that I trade more often than not. A selection out of those. And if you look at my list here, that really marries that up. I love the New York session, so I trade the Nasdaq, Dow Jones, oil, gold, all dollar related pairs I trade during that session. So you can see literally that's my red list on the side here. They're the markets that I trade. Don't use that indicator either. That makes absolutely no sense. I don't know if anyone can make sense of that, but it doesn't make any sense to me. Okay. Oh yeah, the Swiss franc. How could I forget? The Swiss franc? Of course, the Swiss franc as well in the London session. No problem with that. Olive 2017, I can see your FVG covers the open candles alongside with the gap. Is it okay to measure like that? I'm not quite sure what you mean there. If you're talking about this, yeah, so literally when I draw my fair value gap, I go, where did the market close? Literally, where did it close? There. And where did it open again? Which is there. I know that looks weird. It looks confusing. But if you think this is a bullish candle, so it closed at that bit there. And it opened at this area because we did initially go down a bit. But we'd opened down at this bit. So I literally do the close to the open. Don't worry. Don't ignore everything else. Close to the open. Always. Right, a couple of requests to go through before we end the stream. The first one is Euro dollar, and then Universal. We're going to look at gold, and I'm sure other people want to look at gold as well. We spoke yesterday, FaZe, about Euro dollar, and as you can see, a market that was trending higher, as we spoke about, and then we had the initial signs that we're going to start to see maybe a change in the trend and maybe a difference in the trend. And as you can see, we get one break of structure. We then get a little bit of a rally from the demand zone. And then this morning, as people have rightly said, boom. There's our next break of structure. Our next break of demand zone has just occurred right there. Okay. So again, we're now getting more confirmation. Because look at the lows that we're breaking along the way. We've now broken through that low and that low. So yeah, I have to say I'm now probably at the stage after 3 breaks of structure that I'm going to maybe start to look at some selling opportunities. Now, where would those opportunities come from? Well, there's not really anything on the 4-hour time frame yet, but you can see that literally where I've marked those things, we've got that. There's a 50% of an FVG there if you wish to trade from there. I'm probably going to go down now onto the 1 hour time frame and see if there's anything that's a little bit clearer. It's going to have to be this area. Something that looks like that. Now just be careful. And the reason I say be careful is because if you look on the daily time frame, we are still in bullish structure. So this is a higher risk counter trend trade. So you see those lower time frames are now starting to show signs of a change in structure. But the daily and the weekly for euro dollar at the moment still remains bullish. And that's why sometimes I'd always just lower that risk a little bit. But I do like the look of this order block at 1.1125. Could be a good area for some euro dollar downside. Let's have a quick look at gold. Yeah, so basically the way I was looking at gold is I'm trying to be really aggressive with it, and it's sort of working, because I basically drew a fib from this low here to the high printed this week as well. You can see we're sort of in that golden area now. And if you go down onto the 1 hour or lower time frame, you can start to see gold, which is just continuing to find support. And for me, it's a real case of just trying to keep getting into any potential dips that we see in gold. So I think that potentially 2,500 is going to hold. And I think that what we need to do is, if we're going to trade it today, it's a little bit difficult, but we're going to try. I quite like this. Equal lows, that's liquidity. What sits underneath that liquidity? A beautiful demand zone. That's at 2514, or an order block, whatever you want to call it, same thing. And look at that. What's my target? Well, my target is the top of the fib, or the top of the all-time high. 16 to 1 risk reward if I mark that up as a potential opportunity. Yeah, I like that. There's a ton of liquidity sitting below these lows. We might not get filled today. Maybe I'm being a little bit conservative for my entry, but I'm willing to wait for 2514 to potentially look to that as a springboard for today's. Let's call it maybe a scalping opportunity, should we say? Okay. Yes, you can, Dan. You can do that. Yeah, that was one thing that did cross my mind, is that you can use previous order blocks like this. Previous order blocks which were previously support or resistance turned support or resistance. So basically the opposite. So this was a previous demand zone, i.e. a support area. It gets broken, and now we can use it. It's like a break and retest, basically. You can then use it as resistance. I'm still within that zone at that 1 hour order block up there. I'm still sort of within that, so I'm happy. Yeah, there's a chance that we could come up to this 50%, and I may not get filled. But what I will do is, when we get to that 50%, I'll drop down to the lower time frames and see if I get a reaction. See if I can get in a quick scalping opportunity at like a 0.5% from a break of structure on the lower time frames. But I'm willing to wait for that level up there. TM Tucker, hello to you. Good morning. Can you please share the link to the course on the smart money concepts? I'm unable to locate it. Yeah, no problem. If you go over to howtotrade.com, right, and you sign in, or you register with an account with us, what you'll get is and by the way, our website's changed. It looks really cool now. If you register for free, it's completely free. You can access our trading room. And in that trading room, you can access our learning hub, which has our education, which has the smart money concepts module in there. So hopefully if you can do that. Oh, okay. What, are you in the trading room like this now? Can you see the same screen as I can? And you can't see this education button on the left hand side. Okay. I'll reach out to you. Drop me a message. You can message me, can't me? You can message me. I think here. If you direct message me, we'll take this off the stream, and I'll get that sorted out for you. It might just be where they've made some changes this morning. Okay, drop me a message now, and I'll message you after the stream. Oh. Anyway. What happened to USD Swiss earlier? What happened to it? I think, Dan, we're just a little bit of a bounce in the dollar, I think. Weird though, isn't it? It was from this, Dan. Dollar index. It was just a spike in the dollar. I don't think there was any particular news or anything that caused the spike. Yeah, no, you're right. There isn't sometimes. It's just the dollar retracing, really. We said it would retrace, and it is retracing a little bit off the lows. So it's really just probably people have been selling the dollar for so long, for quite a few weeks. They're probably just taking their profits, and when you get that big swarm of people taking profits, you can get a move like that. Okay. Good stuff, everybody. Thank you very much for tuning in this morning. If you are looking to get involved in in trading with us and with one of our brokers, then feel free to do that over at switchmarkets.com. Until then, I do hope everyone has a great trading day. US GDP later, should be some decent volatility in there. But if not, we'll be back tomorrow. And as you said, join us in the room, and feel free to get involved in the streams and the education section and the market analysis. And I'm going to post some NASDAQ analysis in the room in about half an hour's time. I've just got an article to write. Okay. Thank you very much. Take care, and I'll see you all very shortly. Cheers.